Hello, it is the 3rd of April 2011. Welcome to today's silver analysis, the silver log. And in this video, we're going to look back at the 1980 nominal high within the rally that occurred. And the market got up to $50 an ounce. This is the 100 ounce price. And when we look back, it actually contained 54 consecutive days with an LBMA close above 27.5 and 51 consecutive days with the close above 30. Now this is still the record for closes above 27.50. We're at 45 right now, so it's a couple of weeks before we'll take that level out. But some people refer to the $50 high as a blow off top, and on the long-term time frame it was. But it was there for more than just a few hours. When we look back at the data that occurred, this is the closing price, this is the date that the level closed at. So if we go to the top of around 50, on the 16th of January, it was at $48 an ounce, and it had a 9% fall. But then the next day, it was back to 49, 45, and then again at 49 the next day. So what this tells me is that there were a few days where the market was at the $50 level. If you look at these percentage moves, these were the percentage gains and losses they had on a day-by-day basis within that time frame. So it was very, very volatile, to say the least. Also, when we look at this chart, we can see that overall, the market really settled in towards the level of around 37, 3800, sort of like the area where we are at today, or in the same area that we are at today. Now, I don't think this is going to mean really anything in the traditional sense of things when you get back to a previous high. For example, if a market on one day, say today, is trading at $100 a share, and then over the next so many weeks or months it goes down to 70, and then back to 100 a few months later, well, then some people may consider selling to get back to even. When you're talking about 31 years, I don't see that to be much of a case. But if we now take a look at some other data, we'll now move this up to 1800 and even put it into a logarithmic point of view. This is what we're getting. That we hardly ever traded above 18, but we did for about 80, 90 days. So that works out to about 4 months, maybe, above the $14 level. There's the majority of this time frame, but still you can see a dip below here. And then the rally beforehand came from before the 1400. If we switch it to 1200, then once again, same sort of deal. There was a massive rally that took place back in 1979 to get us to where we were then. It went from about $10 an ounce, or $9 an ounce, a little under it, up to $50 an ounce in a little over 100 trading days. There's about 250 trading days a year, so it only took about 4 or 5 months to make gains of 300, 400%. And because of that, the volatility towards the downside was really big. I would expect this type of volatility to happen again when the markets move towards an overvalued stage. But until then, and until as long as we're seeing the standard 4% days and 2% days and big days equaling 6, 7%, then I'm not going to think that there is much chance of a long-term top. Take care.